Hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. What we're trying to do here is talk about the economic data, see how that impacts markets, and then we'll round it off with some trades that we can implement into our portfolio based on those directional assumptions. All right, so without further ado, let's talk about the economic data, what we've seen so far this week, and see how that's going to impact us going forward. Now, we've been looking at these manufacturing numbers. We've seen prices paid. The inflationary numbers ramp up a little bit. Well, that might slow down the manufacturing sector, and it did in the Richmond Manufacturing Survey. We saw that come in a lot lighter than expected. But on the flip side of it, the flash manufacturing numbers that are forward-looking from the PMI, which is the Purchasing Managers Index, those are the purchasing managers looking at the demand coming into their manufacturing sector, trying to project out in time to see exactly where we are looking at for those types of demand sectors. And with that said, manufacturing sector forward looking is still above 50, which is expansion in the economy. And as a matter of fact, we beat on the headline numbers there. They were expected to be 55.9 on the headline number for manufacturer, came in 57.5, and the flash manufacturing for the service sector came in at 56.7. So pretty good economic data is there. And consumer confident, they came in higher than expected there. So while we're seeing these inflationary pressures, that might make us think that the consumer is starting to shy away from spending, but that's not really showing up here in these economic data points that we saw earlier on this week. And going forward, we're going to get some crude oil inventories and a lot more Fed governors speaking. Now, we've been seeing both sides of the coin from those guys as well, where we saw Buller really being hawkish and some of these other folks being a little bit more dovish, saying that, hey, with all these tensions going on, like I just talked about yesterday, probably not going to be raising rates at the pace that they were fully expecting to going forward there. So let's get a markets snapshot here. We've got the crude oil markets kind of in limbo right now. I am a little bit worried about the higher prices here with $5 a gallon or $4 a gallon gas, as that will crimp spending and other aspects of the economy. So I would like to see it come down just because I think that will help with spending. But that manufacturing sector, folks, that strength there and the turmoil we're seeing in the Ukraine is going to give a little bit of buoyancy there to crude oil. Now, bonds starting to make their march to the downside again. That was one blip. You had a chance to sell covered calls in there to try and lower some basis, like we talk about lowering basis in that bond portfolio that nobody ever really looks at. Please watch those videos on that, folks. That's going to really make your portfolio look a lot better if you manage that. Gold futures still continuing to try and hold on to that 1900. We're just slightly out of that right now, but I do expect us to continue to hold on to this because I don't see inflation ebbing anytime in the near future, which would be in the next couple of months. So I think we're going to still see elevated pain here in prices, but heading into the middle or the meat of the summer, I think that we're going to see those inflationary pressures drop because there's going to be an influx of products into the United States off of the shipping. We're starting to fill that, unload those. That was expected to be here for Christmas, folks. So a lot of that product going to be sitting on the shelves there. Bitcoin can't get its legs underneath it. We've got the bonds here trying to make a little bit of a bottom here. I don't really think that equities are going to have a massive sell-off. We can see NASDAQ making a nice little bottom after making a newer low, but we did finish above this Fibonacci and are trying to make a confirmation. We need a settlement above somewhere around 14, let's call it 14,175. Settlement above that would be a confirmation that we're starting to move to the upside there again here in the E-mini S&Ps. I don't know if we necessarily need to have that confirmation finish above the previous day's wick for a confirmation. I think we're really going to kind of make it half back here, right around 44,000 there in the E-mini S&Ps, and that would be a place where we'd start to settle down. We can see that the consolidation is happening when we break it down here in the 15-minute or 30-minute chart here for the E-mini S&Ps. We can see that we are trying to make those moves to the upside, but late day selling as folks are Still a little bit nervous taking profits, all of those kind of things. Weaker hands are definitely not holding up right now. So I would still say that the risk is to the downside, but we need some confirmation. We need some solid candles to the upside for any type of confirmation to counteroppose that kind of trend. Gold, risk is obviously to the upside. Bonds, downside. Crude oil, risk definitely to the upside right now. So I hope this helps you out in your trading day, guys. If you have any questions, comments, or anything else, throw it over there on the side. I'll be happy to reach around. Smash that like button for me, folks. If you're watching the video and you had a light bulb moment, maybe something helped you out in your trading day, please smash that like button for me. And finally, don't forget to subscribe, hit the bell right next to it. That bell is what will give you the indication that I'm popping in here unannounced. So while this video is scheduled for a little bit later in the afternoon, I'm usually doing these sometime before that. So make sure you have that notification bell lit up so that it will send you a heads up when we're coming in here. All right. That's all I got for you folks. Other than if you can't take that, take it easy.